Okay, that's just not the right answer. We need to look at the market in a more practical sense and from a more practical standpoint. Okay, so don't try and lock the market into a box, and don't try and think that just because I'm looking at the 2-to-1 ratio, then that means that I'm locked and I'm set in stone, and my trading methodology now it has to be 2-to-1. That's just not the way I trade. This again is an estimate, and I do this because if I were to follow that again blindly, then even if I were wrong 50% of the time, I would still have the possibility of making money. That's why I use this as a guideline. Remember, it's just a guideline. Okay, so enough of that. So the first step is an estimate. And the second step then is using what I call the logical points. And it really is this simple. I take an estimate and then I use logical points. Now let's talk about exactly how this is going to work. Now let's take a look at not the week that's forming up here. We're not going to look at this week. We're going to look at the past week and the week before. Okay. Now, but we'll take a look a little bit over here. As the market is moving down, okay, up. At this week, we're still not looking like a downtrend, even at this week. And if you remember me talking on these 2 weekly wraps, I was saying, look, we've got some inside weeks here. We've got to watch and see which way the market breaks out. It just so happened that it broke out to the downside. And again, I was looking for the market to possibly come in here to about 96.20 or so. And it just, it hasn't quite gotten there. But anyway, so I was looking, if it breaks to the downside, 96.20 was my target. Again, an estimate. Once the market closes below the lows, which we see here, the market closes below the lows. Now we're looking at the possibility of the beginnings of a short-term downtrend. So how then do we start to glean or gain some potential insight? Because here's the thing, if the market is down here at the low of the prior week, should we be thinking long or should we be thinking short? And I would say, well, you know what, it depends on how the market is acting at the low. That's what I mean by you can't stuff the market into a box. So let's do this. Let's take a look at, and I'm doing this partially because it's easy for me to fit both of these on the screen at once. Okay, so now you can see here I've got the crosshair, the two blue lines. Let me use a different color here. You can see I've got the crosshair, the two blue lines pointed at the low of this particular week. Okay, now on the intraday bars, you can see these are hourly bars over here. So this is a 60-minute chart. At the low of this week, you can see that it was hovering right around the trend line. Okay, now according to the estimate, this is really out in la-la land, right? It broke this low and is pushing down. But we had an estimate for a reversal based on this, based on the low down here. Now, the way that I trade intraday, I really have to go with the trend, and at this point, the trends still were up. Okay, let's just assume that the trends were up. So let's say you weren't looking to trade at this point. Okay, the market got down to the support line. You weren't really looking to trade, so you're just letting the market go, and the week closes. And let's go ahead and take a look. We can see here, there's the close of the week. So the market pushes down during the week. It's pretty much a solid down move intraday. Bounces once, comes back down, and then closes just like that. So when the market moved down, it did this, okay, on the bottom. Actually, it did this. A little bit of a lower low. Okay, that's pretty common. And then it pushed up, and the week closes. Okay, that's the pattern. Now the next week. When the next week opens, of course, it opens very near to the close of the prior week. But what does it do? Well, look, it trades up slightly. Okay, so the market closed here during the week, and here's the market trading up. Well, we've got a couple of areas that we're looking at. Here was prior, this line represents prior support. So what is that? That's now resistance. Well, we can take a look at around that resistance line, and we can start to glean some trading information. So we have a possibility to make a trade over here. And this is where the rubber really meets the road. And the bottom line is this. If you're going to take a trade, The only thing that we can do is identify a pattern, and one of the patterns is once the market breaks through a prior resistance point, it becomes support. And one of the patterns is once the market breaks through a prior support point, it becomes resistance. Now let's look at this from a practical standpoint. Let me move this weekly chart back so you can see what I'm basing these lines off of. Okay, you can see here this high was in November of last year. And again, we're looking at a situation where for the entire week, every trader on the face of the planet said there's no way price is going to get above this line.